Everybody, this is Jordan with Conquer Trading and Investing, and we got a really exciting episode here today. We're going to take a look at some really important technical levels here on the S&P 500. Now, whether you're trading the ES, the SPX, or the SPY, this analysis is going to help firm up your own. Let's take a look together, obviously stronger together. We also have some important macro to look at together. We're going to take a look at some interesting market dynamics, and we're going to see how that all comes into our trading, and we're going to do that right now. Now we're in an interesting situation as we kick off today's video, and that is the fact that we are in the midst of the worst riots since 1968, the worst economy since the 1930s, the worst pandemic since the 1980s, and Mr. Market thinks all is well. There's a disconnect here between the market and what I would like to call the smart money. Now, we're going to take a look at a lot of things today, a lot of things that are going to help position yourself for the upcoming session ahead, as well as for the time ahead. Now, listen, retail tends to get really euphoric here and chase momentum. A lot of people are finally like, okay, there's nothing else I can do. I need to get long this market because now it's completely safe. I have to be honest with you. I'm going to be honest with about a lot of things. First of all, you got to be careful. You got to be really careful. All right. Once you start getting comfortable in a market is when you get hurt. There's no question about that. There's a lot of things I want to focus on with you today. We're going to really focus in on price and see what that's indicating for us. Look, before we even get into it, I want to really focus in with you. Look at this range that we were focused in on earlier today. You could see it between this trend line, which is coming in down right around now, right to about 30.54. And then you could see this upper trend line, which was the area providing support, coming in right now around 30.26. This is the area. Let me zoom in on that for you. So I really want you to focus in on this area right now over here. And you could see I included earlier today this little trend line as a bit of an edge for you. And that's coinciding with this trend line support right over here. Now, this is not an illusion. The market is caught between these levels. It seems like there's almost an overhead resistance right over here. It's around 3,500, or exactly where the market is right now, and then coming back down to what is like the whole number around 3,000. This is where the intraday support that we've been following and continues to be support. Now, the market is caught between these two areas and it's having trouble moving up. Now, this is not an optical illusion. The question is what could cause the S&P right here to break above a next leg up? And I'm going to take a look. I'm going to step back in a moment. I'm going to show you what that looks like above us. What could cause the S&P right here to break above this? And no, the answer is not the expansion of the global monetary supply. You actually need buyers. Who's going to step in there? We know that retail will be happy to jump in. They will be happy to jump in and continue riding this if we do break above. There's no question about that. And actually, they've been right about that. And we're going to talk about that in just a moment. But the thing is that the smart money, right, fundamental investors, they still remain skeptical. They remain skeptical of this whole move, and are they going to be the ones providing the gunpowder over here to take us the next leg up? We're going to have to really take a serious look at that and watch. Let me go ahead and clean this up for you now that you have that in focus. I want to first look above and see what's above our heads. And before I do that, when I say fundamental investors, right? First of all, right? This was the easy part. This was the easy part, not this, but this was the easy part, right? And also over here, this was easy. This became a little difficult, and all this has been difficult. Yeah, anyone who's going ahead and like, you missed the last 8% up. Well, first of all, let's call a spade, what is, right? There's no question over here, we tried to attack really strong to the downside on the break of this trend line over here. That was shaping up to be also a possible head and shoulders. That's a good trade. Take that. You're going to make a living. If take those type of trades and you're on your way to make a living in the markets. There's no question about that. As soon as we saw that was a fake breakout, got above here, we were bull side. There's no question. I was very clear. Bulls are in control. right? What you do with that is up to you. Yeah. So I'm not the only one here, though, first of all, who's had a hard, difficult time during this. It's because I do remain skeptical, right? Again, easy money here, easy money here. This has not been easy money. And if anyone thinks that trading is just going ahead day in and day out, being able to take money out of the market, that's not how trading works. Trading is by having a systematic strategy that over time is going to have you on the right side, in the green, and profitable. What type of situation are we in? Why are we wondering whether or not, why are we sitting here today wondering whether or not we're going to have anything behind us to go ahead and push us up to the next wave up in the market, right? What could cause that? Well, let's take a look at what fundamental investors are looking at actually over here. Here you're looking at the US total market cap to GDP ratio. And you'll notice that historically in bear market recessions, it's bottomed out with an average right here of 0.47. Okay? Sometimes higher, sometimes lower. But over here at 1.23 or at 1.2, no, that's not going to cut it. Where are we right now? At 1.44. There is actually 67% lower. 67% lower to what the average has been. There is a tremendous opportunity on the short side, right? Once we take out these lows over here of 2018 and 2020, there is tremendous downside potential. Now that doesn't mean for a second that it's the time to come in right now and start short in this market. That's actually not the case. This market has a lot of momentum here. It's fighting off a wall of worry. It is fighting off the riots. It is fighting off the growing tensions between the US and China, and it keeps doing that day in and day out. I want you to focus over here on this trend line right now. This trend line over here, this is the one I want you to focus on. A break below there, right? A break below there, and then we have a possibility of really coming down and taking a nice test of either this trend line over here coming in at the support right now at 29.47, or the one below it, we have another trend line, our main trend line at 28.96. That's soon going to be coming in at the support at 2,900. Those are all big numbers. Now, we are far from there right now. We have a lot of work to do. We're going to look at what we need to do to get down there right now. But this is where the only thing that I'm focusing on right now is this level right here that's coming in overnight right around, let's call it right around 3,030. On the upside, there is no way that I'm going ahead and looking to take a long over here. There is absolutely no way. Any way you look at it, we are on the upper part of the range. While it is possible we could go ahead and break out over here, it is possible we could break out over here. Look over here the last couple of times that we did test this. Yeah, I'm going to focus in on this area. This is the last time we were trading above the range. And then over here also, this was the other time we traded above the range. If we do break above and come up into this area, that's also an opportunity to look to fade this. Now, I do not think for a second this is the type of market that you want to be looking to fade this, trying to pick a top, looking to go ahead and come back now and test the lows. That's not happening. When we do start seeing this market sell off, and believe me, this is eventually going to break down. This is eventually going to break down. And listen, if you haven't really worked this out in your head, you really need to spend the time doing it. You go to the channel and look at the video uploaded on Wednesday where it talks about global liquidity. If you are under the impression, and if your investment thesis is around the fact that because the central bank's balance sheets are expanding, then for equity markets are going to go up, you are missing how this works. That's not how it's going to happen. This could actually be sell in June. Sell in June, as we're going to see lots of defaults come our way this month. Watch what happens. We're going to be under continued pressure this month. Now, I don't think this is the time to go ahead and short the market looking for a retest of the March lows. I don't think that's happening yet. Maybe that's going to come in the fall. When that's happening, we're going to see the market selling off. This type of move is not a sell-off. That's a beautiful move over here. I want you to focus in on that. This is the type of move that we're looking to capture right now as we're towards the top end of our trading range. And we're towards the top end of our trading range. When you're towards the bottom end of this trading range, you look for these type of moves. Okay, but looking to take a long over here, that's dangerous. That's dangerous. I really would like you to understand, this is not about trying to make money day to day. This is about making money over the long term, which means that you have to really look at your risk. Is the risk to reward good right here, taking longs? You have a lot of momentum behind your back, but you're coming up into an area that is high risk. That's a high risk area. All right. Is there a possibility that we're going to break out here to the upside and even test into that? And I've talked about this resistance here at 30.96 is not strong resistance. What I'm trying to get you to do in this market is protect yourself right now. If you don't want to sell in this market right up here, then stand aside and wait for the opportunity to come into the long side. Where will that be? Well, I'll tell you what, this is when it starts getting attractive. As we come down into the support around 29.47, which coincides with this trend line over here, this trend line support. That's when it becomes attractive to try and play the long side. Perhaps. Maybe it's going to be down here. Maybe it's going to be further down to the really important trend line. Let me go ahead and extend that. That's coming in right now today around the whole number of 2,900. We also have horizontal support over there. All these become attractive as far as a risk to reward ratio goes. Now, are we going to be able to come down and test those where you'll have a chance to buy back into the market on the long side? Maybe. But if not, I could assure you, and I do assure you that if we break out over here, if somehow we find some buyer, right? There's a lot of money on the sidelines right now. There's a lot of money, smart money, that's not participating in this current leg of the market. And what happens if they decide that they need to, right? Is this the type of time of year when you see a lot of money come into the market? No, it's absolutely not, right? What happens if you did, and what happens if we get another nice leg up? I guarantee you there will be pullbacks into supports, and it's going to be a safer, higher probability trade than it is right now. Now's not the day to be looking for a trade. Now's the day to be on the sidelines. Now's the day to be safe, protecting that capital. Don't try to force things. Don't try to force something that's not there. Now, we're watching the market be resilient. Listen, right now we're watching this breakdown. This is good. This is what I wanted to watch for. And the signal I was not looking for was actually a breakdown back. Let me zoom in here. Back down into this range. And focus on this range. This is the most important thing you can see right now on your screen. Right over here. This range. Really focus in on that. But I want you to be aware, it's not just that range. It continues to be this local support over here. Right? That's a really important level. And on the top side, yep, it's Friday's high. Right? This is the area that you need to focus in on right now. Is it possible to take a trade overnight? Yep. If we get back into this zone over here, come back up, and that holds as resistance, look over here. Look over here. That trend line right there coinciding with that resistance at 30.54, 30.52 in that area, if we're rejected over there, that's an attractive place to play a short. Your risk reward just for the high of the day, your risk to reward from the high of the day, which is also Friday's high, right? That's where your stop loss would be. It would need to be tight. Paul Tudor Jones, the most money to be made is on the turn of the market now. I am absolutely a proponent of trading with the trend. As a swing trader, I am looking to go ahead and I'm looking only to buy off support in uptrends and sell off resistance in downtrends. And I avoid sideways markets, although you can make money playing them. Nothing wrong with buying off of support and selling off resistance in a sideways market. But on the S&P here, what I'm looking to do is I'm looking at intraday levels. I'm looking at intraday levels, and I'm looking to go ahead to set myself up into swing trades off of them, which means low risk, right? Look at this trade. It's low risk. You have to keep a tight stop. Friday's high, today's high. You're wrong if you get into a trade over here, right? Going down into the support, look at that risk to reward. By the time this trade triggers, greater than 2.5 to 1. That would not nearly be where we were looking for take a profit. That would be just looking to go ahead, set our stop loss, extend this line over here. This is the area to focus on. This is the area to focus on. If you come back down and you continue with momentum out of here, and you come down into this area of local support, what happens then? You go ahead and you lock in your stop. You're locking in profit for whatever this is. You're locking that in. And then you're going ahead and you're holding this trade. If you take out this local support, at that point, we're going to see a little bit of a retrace over here. What's your risk reward coming down into the next area of strong support right around 29.72? What's your risk reward from this trade over here if you entered somewhere around 30.45? Now, the only way you're entering is if you break down into that range and then flip it, that broken trend line, which is now supposed to be support, as resistance. What's your risk reward coming down all the way to 29.72, the first strong support? If you're able to get in this trade, that's going to have a risk, let's call it of 20 points on the S&P, right? What's the potential gain you're looking at? You're looking at possibly taking, call it 40, 80 points, right? So 1 to 4 risk to reward going into this area over here. Pretty nice trade. Potential is definitely there. That's worth getting ourselves into if it happens. Otherwise, stand aside today. Today's not the day really to be forcing something. Listen, as a trader, you have to know how to manage your risk. How much for each trade are you willing to risk? It's not dependent on where your stop loss is. If your stop loss is 10 or 50 points out, right? That doesn't matter. You don't go to risk a certain amount of points for a stop loss. You're risking a certain percentage of your account. And it's the same percent whether you're risking 20 points or 100 points. All right? You have to stay humble. If you think, right? If you're over here and you're like, oh my goodness, you were not, for the last couple of weeks, you not have been able to navigate this perfectly. You are far from being profitable and you are far from being humble. The same way, when you start killing it, when you're making good money, you can't get over cocky and you can't get emotional about it. If you are emotional but when you're making money, that means you're emotional when you're losing money, and you are far from success. There's no question about it. You have to trade with an edge. What does that mean? To trade with an edge, it means you have to have a proven strategy that you have faith in and know that works, because the only way that you'll have discipline is sticking to something that works. If you find that you have no discipline, if you find that you have no trading plan, and every day you go into every trading session without a trading plan, and your trading plan is, I'm going to buy off the 10-day moving average. That's not a strategy or a trading plan. You need to have one, and you need to always be looking to improve your trading. You have to know that you can be wrong. Being wrong in trading is part of trading. You have to not only know that you are going to be wrong, you have to be prepared to be wrong. You have to cut your losers short, even if it means doing it 7 or 8 times in a row. You have to focus in on what you do best. You have to give yourself the edge. I have multiple edges, and my greatest edge is layering edge upon edge upon edge. That includes what time of day I trade the market. That includes what instruments I trade. That includes what time of day I trade. That includes my risk. That includes so many different things that I layer and layer and layer, giving me a greater edge. You cannot let your ego get in your way. The other thing that you have to know is when to stay out of the markets. Staying on the sidelines is as strong as a position as being in the wrong market. You have to understand that. And what that means for you right now, if you only are looking to play the buy side, if you believe finally here that all the bulls are in control, that the risk is to the downside, not on the upside, at this point here, and then you have to be waiting for a pullback into an area of support that gives you a good risk to reward ratio, and then you could lean into it. Since we broke this resistance at 29.71, it has been very difficult to trade on the buy side. The only pullback we had lasted so quickly that it didn't give a trader an opportunity to get in there. It absolutely did not. Don't kid yourself. Be smart. Trade smart. there's a fantastic position today, and that could be on the sidelines for you. I've outlined what I believe is an aggressive position, a good one if it happens that way. I think that the risk up here is too great to the upside. Be careful. You got to be careful up here. All right, everyone. I'll see you all tomorrow morning. We go live at 9 o'clock a.m. Eastern Time, a half hour before the U.S. market is open. We'll take a look at what's going on, and we'll work out our plan together for the session ahead. Have a great day, everyone.